How much can you inherit without paying taxes? Every so often, Congress introduces bills to reduce or repeal what are known as death taxes. Eliminating these levies tends to create controversy. One side argues that the estates of high net worth descendants should pay their fair share in taxes. The other side argues that such a tax is unfair to those left behind. But the constant attention to the federal estate tax and the less common state-driven inheritance tax leads to many questions. One such question is how much a beneficiary or heir can inherit without paying these taxes. To answer this, it's a good idea to understand exactly what these taxes are and how much they might cost. With this information, it's easier to introduce elimination or reduction strategies. Defining death taxes. As can be surmised by their description, death taxes come into play when someone dies. Such levies are better known as the federal estate tax. According to the IRS, it is a tax on your right to transfer property at your death. This levy analyzes the departed's asset ownership, interests, and fair market values, then combines them into the gross estate. Specific deductions, such as mortgages, estate administration expenses, property passing to spouses, and charitable gifts, come into play, resulting in the taxable estate. Some states also have their own estate taxes in addition to the federal estate tax. And some states have another type of death tax known as inheritance tax. The difference? The departed's estate pays estate taxes, both state and federal, before assets are distributed to heirs or beneficiaries. 17 states have estate taxes. The recipients or beneficiaries pay inheritance taxes after asset distribution. There are 6 states with inheritance taxes. Here's an interesting fact: Maryland is the only state with estate and inheritance taxes. To pay or not to pay? Because of the above, there is no one answer to the question of how much money you can inherit without paying taxes on it. It's the same when trying to answer how much you can inherit from your parents without paying taxes or paying federal taxes. The response depends on several issues, such as the estate tax thresholds, where the beneficiaries or heirs live at the time of the decedent's death, and the relationship between the two parties. Estate tax thresholds. It's important to understand that not all estates will be subject to taxes. On the federal level, the IRS sets limits or thresholds on estate values before taxing them. You can inherit up to $12.92 million in 2023 without paying federal estate taxes due to the estate tax exemption. However, some states have their own inheritance taxes, so you may still owe taxes to your state. Any estate exceeding the above thresholds could be taxed up to 40%. Furthermore, the following list of states, provided by taxfoundation.org, levy their own estate taxes with lower thresholds and varying percentages depending on the tax bracket. Let me read through them by state, threshold amount, and tax percentage. Connecticut, $12.92 million and 12%. District of Columbia, $4.258 million and 11.2% to 16%. Hawaii, $5.49 million and 10% to 20%. Illinois, $4 million and 0.8% to 16%. Maine, $6.41 million and 8% to 12%. Maryland, $5 million and 0.8% to 16%. Massachusetts, $2 million and 0.8% to 16%. Minnesota, $3 million and 13% to 16%. New York, $6.58 million and 3.06% to 16%. Rhode Island, $1.733 million and 0.8% to 16%. Oregon, $1 million and 10% to 16%. Vermont, $5 million and 16%. And finally, Washington, $2.193 million and 10% to 20% tax. As such, if the departed lived in any of the above states or DC, the threshold for estate taxes is lower than that involving federal taxes. Furthermore, double taxation could be likely if a decedent's estate located in any of the above states exceeds a value of $12.923 million for 2023. Inheritance tax amounts. As mentioned previously, inheritance taxes operate differently. These taxes are paid by beneficiaries and are calculated based on asset value and tax brackets. The following states, provided by taxfoundation.org, levy inheritance taxes: Iowa, 0 to 6%, Kentucky, 0 to 16%, Maryland, 0 to 10%, Nebraska, 1 to 15%, New Jersey, 0 to 16%, and finally, Pennsylvania, 0 to 15%. reducing or eliminating death taxes. Whether such taxes are considered unfair or justified, it's important to understand that not all estates will be subject to levies. In 2020, for example, fewer than 0.1% of estates filed the tax forms, with only 0.04% of estates actually paying federal taxes. Additionally, the estate tax exemption is portable between spouses on both the federal and state levels. This means that spouses inheriting estates, no matter the value, will not have to pay taxes. Finally, in states with inheritance taxes, not all beneficiaries need to pay. Only distant relatives or non-related beneficiaries might be responsible for those expenses. The best way to reduce or eliminate estate or inheritance taxes is to encourage the following. Transfer part or all of the estate to an irrevocable trust and transfer part of the estate to it. Give funds to family and beneficiaries before death to reduce the estate size. Pass the entire estate to a spouse. The takeaway is that while death taxes exist, they can be mitigated and/or reduced. Planning before an individual's death can help ensure the entire estate value can be passed to future generations with minimal loss. Let Realized build you a passive, diversified portfolio designed with minimal uncertainty while avoiding as much capital, income, and estate taxes as possible. To learn more or book a consultation, check the links in this video's description. Thank you for watching.